The second topic we discussed today is non-financial objectives. We just mentioned about the financial objectives and the ratios or the investors' ratio to measure those financial objectives. Next is about the non-financial objectives. A company, for example, is an entity or is a separate entity in the legal sense. In reality, it is made up of a collection of individuals and interest groups. All of whom have personal objectives to fulfill. Here it's about an organization structure. A company, say here, here's a company, and it has a lot of departments. For example, it has HR department, it has the sales, it has logistics, it has finance, and probably it has marketing function as well. This is the organization structure, and the company, say it has a lot of stakeholders. Here is the employee in different functions, and we have the management here. Okay, one of the stakeholders here is the shareholders. And we have, for example, the vendors or suppliers. We have customers. And also we have like local government. Okay, the communities. We have different stakeholders of the company or even the bank. We have different stakeholders. And remember, shareholders is only one of the stakeholders. For stakeholders, it means they have interest in the company. And their objective to this company is not maximize shareholders' wealth, because they are not the shareholders. They have their personal objective. They have their own objective as well. So here, what we mentioned is all the individuals and interest groups, all of whom have personal objectives to fulfill. Okay, they are not financial objectives, honestly. And management will constantly be trying to balance the return to these groups, like shareholders and employees. Okay, for example, for shareholders and employees, are their objectives or conflicts to get with each other? Employee and shareholders, their objectives are conflict with each other? Maybe yes or maybe no, because if a company, if the employees in a company are not working well for that particular company, then can the company running good to make a lot of profits or to contribute a lot of value to the shareholders? The answer is no. So the shareholders and the employees, okay, they have some similar objectives, but they have some conflict as well. Because, for example, the employee would like to have the highest salary in the market, but it will it probably affects the shareholders' interest. So we talk about balance, the return to this group. And the management also need to discuss on corporate objectives to compromise, which takes account of what the different groups are seeking. Okay, for example, the customer would like to have the lowest price, but it is conflict to the shareholder value, right? And also the suppliers would like to sell you the highest price. Also, it is conflict with the shareholders' interest. So it's about how the balance between these parties. And consequently, some objectives may be financial in nature, such as rise in earnings per share, which others will be non-financial. For example, shorter working hours, increase the level of waste recycling in the manufacturing process. So we talk about interest group or stakeholders of a company. We just mentioned about the equity investors or the shareholders. Payables mean the suppliers, vendors. Customers, employees, managers, the community at large. Okay, for managers, we'll talk about the agency problem later. So we remember the managers and the employees, they are different interest groups because the employees are the staff of the company, which the objective is quite simple, the salary. For managers, suppose they are working on behalf of shareholders. Okay, so they are working on behalf of shareholders. So a good performance manager or good perform manager does it mean a good perform manager contribute the value to the company? Okay, so we need to define what is good performance or good performed manager. Okay, maybe achieve the sales target. Okay, maybe, for example, the market share target. Then you need to ask whether these targets, objectives are in line with the shareholders' wealth, to maximize the shareholders' wealth. Okay, so in terms of good performance, so you need to ask yourself whether these targets are consistent with the good performance with the shareholders' wealth. Also, the stakeholders we mentioned about the community at large. Okay, they are the stakeholders of the company, and non-financial objectives include, as I said, growth of sales, and the diversification. Maybe right now the company is selling like automobile, selling car, and maybe you would like to have some diversification to other business. Maybe, for example, selling washing machine. So whether this diversification is a good move for a company, or just would like to, the purpose is only to diversify without any value created. Survival. Okay, survival means the company right now is making loss or not in the good financial conditions. It needs to do a lot of things to survive in the market. Contain the workforce, to keep the labor force here. And leaders in the technology development. You need to ask whether this move, leaders in technology development, can create value to shareholders. Maybe not, right? Product service quality. So you can be the best service quality or the product quality in the market. But you have to ask whether this can contribute positive NPV or positive value to the company. Environmental protection is good for a company to have such slogan saying, "We are the best company to provide to protect the environment." But is it good, or is it a positive signal to the shareholders?